I'm Catherine Ross. I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's going on? What's on the top of your mind today?
Boeing's top of my mind because Calhoun, Boeing needed to put out someone with stature who could explain what's really going on and explain that it's not Muhlenberg's show, but it's a company. It's a great American company. It's a company that made mistakes. It's a company that's going to pay everybody that made mistakes. It's a company that feels very bad. It's the CEO we back. It's the CEO who's given up his salary until it gets done. I don't know what more you can ask. And Calhoun was a great presence. I got the feeling that if there was a better way to do it, I can't think of it. That was everything I wanted to see, Catherine. And Mr. Calhoun has always had tremendous bearing, and you see why. It was an amazing interview. And if you are in Boeing stock, I think you should feel, and I don't like to conflate the money with what happened, but you should feel better today. You should feel better today.
Over on Real Money this morning, you wrote about how the algorithms are kind of making earnings season meaningless.
Look at this. Look at the oils, okay? So Chevron had a light quarter. The stock's now up 6. Union Pacific, just an okay quarter. The stock moves 6. Federal Express, bad quarter. Stock goes up 8. This is all has to do with the inability of the machines to slow down. They just take the offer, and they move up stocks in a way that is disastrous for the market. Now, there's a lot of clowns out there who say, Jim, you're fine when it goes up, but when it goes down, that's when you complain. These people are idiots. They're like my dog Marley, who I caught eating paint yesterday. I mean, you guys, they're eating paint, these morons. Like, I don't like it when it goes up like this because it scares people. And like I have a lot of people on Twitter who are hateful, stupid beyond belief, and should really just be plywood tables. But a lot of people who say, Jim, you love programs going up. These last 2 days have been an abomination. I do think, by the way, the McDonald's is bottom, though. I told you. I mean, it's 191 level. And
you and I have been watching that one since last week.
I like this fella. I think that the stock gave up a couple of bucks because people knew. That's what happens. I don't condone it. But, the Real Money piece is really, everyone should read it because it's about the absurdity of the way trading occurs now versus letting the offerings build. You walk away, sellers come back saying, where is that buyer? If he wants to buy up 6, I'll sell him stock. But if you're moving like that, then you're taking all the offerings walk away, you move the stock up 6, and then you get a negative piece of information, the stock's down 6. I hate the up 6 more than the down 6 because the up 6 makes people feel confident. And or they just say, listen, up 6 today, down 6 tomorrow, Chevron up 6, down 6. So I don't like it, and there are a lot of people who are so embarrassing in their lack of knowledge, but their insistence and arrogance that they know more, that I surrender to you. Take all the millions that I've made in the stock market. Just take it, okay? And go burn it. Put it in a chimney like in the show The Shield with Lem. Just go ahead. You see, I made it. I mean, it did happen, all right? It didn't happen because I didn't go to college to get stupid, as James Caan said famously in Godfather 2. I made it legitimately by picking good stocks and having it go up. And I've given away $2.5 million in the Chapel Trust by picking good stocks. And if I am, maybe I am a 40-year fraud, but that's a long time to be a fraud. It's a long time to just say, you know what, I make money, but I really don't. So I say to the people who think that I don't know what I'm doing, fine, prove to me what you know. Show me the millions. Show me the millions.
Jim, let's take a step back. For the investors and the Twitter followers who are not, we're literally taking a step back. For the investors and the Twitter followers who are not eating paint, should they be worried about the way that the markets are trading right now?
Well, look, I think that the market is, the growth stocks are doing terribly, the value stocks are doing great. Like, take Dow Chemical. Dow Chemical is something we own fractionally large. We sold it right around here. It was doing terribly. Why? Because people thought this could be a recession. It goes all the way to 6% yield. Suddenly people think it's not a recession, so it goes right back to where it was. The clowns who said, listen, if the yield curve inverts, then you got to sell everything, they have to now come back and buy. So what you're doing is you're getting a lot of seller's remorse when it comes to the value and buyer's remorse when it comes to the growth. And I think that the growth stocks that are being thrown away right now are very valuable. And I think that the value stocks that are being bought up right now should cool off. So take advantage of the fact that they're throwing away the Mercs after reporting an unbelievable quarter and developing maybe the greatest drug of our time, Keytruda. And they're buying Dow Chemical and buying Ingersoll Rand, Illinois Tool. They're buying stocks that have just been crushed. United Technology is not crushed, but they're buying that. And I want to take the other side. I want to say, okay, look, we own Lam Research. We're up. We just went up 100 points. So let's take some off the table. I mean, a stock that goes up 100 points in a couple weeks is not a stock I want to buy. It's a stock I want to sell. Now, to those who criticize me, I say, show me the millions.
Jim, I want to talk about our real money stock of the day, which is Uber. Now, Uber reported earnings last night.
Uber's about two things. It's about Uber food and how badly that's doing, but they won't blink. They should just get out of that business. I know that business because I own 2 restaurants. It is bad business. Now, if you own restaurants, you know, you're all laughing. I know you guys who are out there own restaurants because we all know it's a lousy business. It's like Grubhub is the same as DoorDash is the same as caviar. I mean, we had caviar. Suddenly we still have caviar. They bought DoorDash bought it, and Grubhub. A conference called the Promiscuous Diner, which of course is not a diner on the. I thought it was on exit 53 on the LIE. Turns out what he's talking about is the diners are promiscuous. They take anybody they want. There's no edge to it. I had Ojo on last night, a scooter company. They say that you can get 30% more delivery. Okay, so let's just outfit everybody with Ojos. I mean, this is one of those things. It's not a business, people. It's no more business than uncoated free sheet paper. That's always the example of a commodity. So Uber, if they blinked and said, you know what, we're going to give Uber food to SlubHub, to Grub Slub, whatever it is, Grub Slub would go up and so would Uber.
Grub Slub. I like that.
Grub
I'm going to use that for my
Grub
next company.
Slub.
All right, but Jim, they still think that they're going to be profitable by 2021.
Yeah, well, maybe they're going to give
tomorrow.
Uber Eats to Grub Slub.
We're going to see a lot of movement in that space then.
I mean, let's blink. I mean, that's just a money pit. I mean, honestly, Dara, I love you, but, don't be in the money pits.
Does that advice go to investors too? Don't be in the money pits?
Well, let's wait. If you want to really be an Uber, why don't you wait till the billion shares come off lockup?
Tomorrow.
That could be a moment. Now, look, let's stop laughing. That's when we bought Facebook for Action Alerts, and we're up, 160 points. So, look, if you really like it, you'll get a chance to buy. There'll be what I call supply.
Let's talk about another unicorn that had earnings this morning, which is Peloton.
I don't know. The market just hates growth. Peloton had really good numbers. My wife was using the Peloton this week. She took the laundry off it.
It's no longer a clothing rack?
It was a metaphor. Just like the black cat was a metaphor for the Giants, my wife on the Peloton was a metaphor for Peloton. But people hate growth too much. This is overly hated. This was a really good quarter, and there's no denying it's a really good quarter. There's nothing I can say. It was a good quarter.
All right, Jim, we've got a live show over on Bull Market Fantasy at 10:45 a.m. today.
Yep, and I think that everybody who plays fantasy, which is like everybody, knows that there are 6 teams on a bye. So this is your worst week, everybody's worst week, but we've got the antidote.
There we go. All right, Jim, thank you so much for joining us.
Absolutely.
Guys, thanks for watching. We are now heading over to...
let's tell them that next week there's a conference call. We're doing our
the Actual Alerts Plus Club Call,
and
yes.
we'll be doing some promotion for it. But if you're watching the free video, and there are a lot of people who go on Twitter and they say, tell me about blah, blah, blah. Well, it's owned by my Chapel Trust. They're never going to get that call. It's to the people who pay their dues to the club. I belong to 2 clubs. I belong to the Elks, and I belong to the Action Alert Club. Oh, I still own the Beacon Hill. I still pay that. Whatever that, I pay that.
3 clubs.
These are the, 3 clubs. But the Elks, by the way, Pat Shermer belongs to the Elks. And if they fire him, they're out of their minds. I mean, they haven't even a chance. But, this is the conference call next week.
All right, guys. So head on over to actionalertsplus.com for our daily show as well, which you can find on actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.